Hey traders, TG Watkins here. It's actually Friday morning when I'm recording this, July 29th. I hope everybody's having a good time. It has been a heck of a week as far as some news and data out there. We had the FOMC. They did raise rates 75 basis points as expected. The market seemed okay with that. I've been hearing some talk that maybe the market is trying to signal that this is peak tightening, peak QT, that after this, the Fed is going to be a little bit more either accommodative or they're going to just kind of make sure things are okay, but they're not going to be as aggressive going forward as they have been. So not that they're reversing course or anything, but just that they're just going to be less aggressive, and the market seems to like that for now. That's one idea to be running with. So let's see if that kind of holds through. GDP came in negative. It was negative 0.9, which is actually less negative than I was expecting. I heard that estimates were supposed to be negative 1.5 to negative 1.2. And the other thing that I'm hearing about that might be offsetting such negativity is that we had a lot of energy exports, like a lot of natural gas exports because of the Russia-Ukraine thing. So that might have been the reason for the change on that. The market seemed to digest that fairly well too. And then we had Microsoft and Google and Amazon and Apple earnings, and they're all up. So the market liked that too. Now, as my understanding is that they weren't necessarily stellar earnings, but they're less bad. So given the backdrop of everything, this has kind of been the thing that I've been talking about for the last, I think, 2, maybe 3 weeks at this point, is that the market seemed to be hammering out a bottom and generally trying to make its way back up. Now, I don't think that the bear market's over. I think that this is mostly a bounce, and I think we're getting back into some overhead ranges before we roll over again. So we can ride this to the upside for a while and see where it goes, but other than that, just remember we are in fact in a bear market, and don't get too distracted by that. All right, so if we come over here to the S&P, the first level that I was in the sand that I was looking for, and then I was talking to people about, was basically the daily 50. We need first and foremost price to get past the daily 50, and then pretty much if and as if that were going to be happening, the next thing I was going to be seeing is I wanted to see price get up to about the weekly 21. So we have that weekly 21. We have that price past the daily 50. A lot of this stemmed from this was kind of near-term capitulation. That was one of the CPI reports that really freaked the market out, and so that was capitulation. And you could also see here price down, Moxie indicator up. That helped put in that divergence, and then after that we just get a bunch of oscillating back and forth, back and forth, back and forth. But we finally broke out over the hourly 200. Then we did a little pullback. The Moxie indicator was above 0, so bounced right off of that, but that was going into FOMC and earnings and GDP and all that kind of crazy stuff. Now, where we are currently, well, it's kind of getting a little extended. I would be expecting some backing and filling from here, mostly because price is up here at the third ATR. It's running into previous price congestion, and we are at the weekly 21, and oftentimes around the 21, we start to we get some resistance and we kind of back out a little bit, and then we'll see if we move up. So I am at this point, I'm not quite sure what the path is going to be. I imagine there's going to be a pullback. Let's see if the pullback stays above the daily 50, and if it does pull back and then moves back up, I would imagine that at some point, and I don't know when, but at some point I think we should probably be looking to see if the S&P can hit the the weekly 50 and the monthly 10 SMA. So those are generally the ideas. And of course, I don't think it's just going to go like this. So I think it's probably going to kind of go like that, something to that extent. So that's the S&P. If we look at the UVXY, this also verifies the market strength. So this is good. This is what we want to see if the market's going to be moving up. I have been talking about this trend line for quite some time, and we've definitely broken that trend line. So that's good. It's the other thing I've been saying with that trend line is things will work until they don't, and this is where it's verifying that it's not working. So that was definitely something I've been talking about for a while, and you can see that it's been doing a pretty good job following the hourly 50 in through here. I was getting a little bit, like in the last video or newsletter, I said, hey, I'm just keeping an eye on this because it's not exactly rolling over, and it is was kind of moving up a little bit into the underside of that hourly 50, and that was pretty much right as price was trying to decide what it wanted to do with that trend line. So I was just kind of like, okay, got to make sure that UVXY is on board to the downside for the rest of the market. If we look at the NASDAQ, pretty much the same thing. And you can see that there's a bit of a trend line here, and it is breaking out from that trend line. So that's good, but that also means that it might be getting a little extended, and I would expect to pull back, and then we can see if it moves up from there. Again, weekly 21, third ATR. You know, things are just kind of getting a little bit frothy in through here, and let's see if they pull back at some point. And then the IWM, same basic situation. It's been doing nicely. You know, it's been a lot of chopping through here. It did finally break out, bounced off the hourly 50, but now it's up here, third ATR, resistance 21, and there's some room here for price to pull back and test the daily 50. So let me kind of move over. Let's look at Microsoft. Now, I am not an earnings trader. I don't like to trade specifically for earnings, and that's what this move was. So there's nothing I could have really done about this, and I was telling other traders over at Simpler Trading that, yeah, it was like going into earnings looked really bad, definitely going straight down, and only on earnings did it actually turn around. So this would have been one of those buyable gap ups. You would have had to buy it and just chase the strength. In this case, it did work out, but the only other thing I was saying is that it was having a hard time getting lower past this line in through here. So yeah, again, at this point, great moves, but they are starting to pull away from support. So just kind of watching these things and saying, you know, if you were long on them, hey, that's great. I hope you had a good time making money with them. And given that this market is very volatile and short-term trading is kind of the thing, I wouldn't. I would say to take some profit. Honestly, take some profit on this kind of stuff. It's likely to pull back. We don't know how far that pullback is going to be, and that pullback could actually erase all of your gains before the next move up. So if it does pull back and then eventually move up, you can make 2 trades out of this instead of 1 trade that you kind of have to slog through. All right, so Google, similar boat as Microsoft. It was looking real rough going into earnings. You can see it was down there, but once again, it was holding for this trend line. It was holding the double bottom. It was not holding, let's see, it was not holding this trend line, but it was doing a double bottom. So, okay, you know, see which one's going to work. Up on earnings, yep, great, but not quite as energetic as Microsoft and all of that. So it is still in this process. It still has a gap here between price and the hourly 50, which we need to see if it can verify. We need to see if price can eventually hold the hourly 50 going forward, if it's going to keep going higher. Now, I think it is. I would imagine that Google is going to go higher over the course of time, because there is still a pretty big gap here between price and the weekly 50. And so, as I was saying, I was kind of thinking that the S&P over the course of time will try to get to the weekly 50, and I have a feeling that Google might be doing the same thing. So big picture and bumpy road, but I do think that's probably where things are going to go. Then we can take a look at Apple, and in through here, you know, it's had a pretty stellar move. I was a little bit concerned about earnings because it was coming up here into the daily 200 and into the weekly 50, and it would just be a perfect scenario to drop price on earnings, because you could then later look at that and say, oh yeah, well, it hit those moving averages and went down. But as I said, I'm not a earnings trader, so I was taking no positions going into earnings, and I was saying you definitely can't short it at this point, because even though you have that resistance overhead, there's nothing changed. It was still above the hourly 50. The Moxie indicator was still above 0, and so, you know, the momentum was going to keep this thing going. Now, this might be a short at some point. You know, I would expect price to probably pull back to the daily 50 at some point, but I don't see it quite yet. You know, maybe this is going to be the peak because this was news and it jumped up, and you can see it is a bit extended at this point, and it is coming right back into previous congestion, previous price action resistance. So we got all that, and as I said, I wouldn't be surprised to see price pull back to the daily 50 at some point. So we'll have just to see where these things go. I mean, this market has stocks going every which way, and they're all doing their own thing. So there is no real direction, because Apple was kind of moving on its own accord, while a lot of the other FAANG stocks were just kind of down or doing nothing. So yeah, you got to take each stock a little bit on its own and especially with these earnings reports that we have coming out, they are making things go all which way. I mean, look at Intel, that thing went down. Anyway, so Amazon also had earnings. And you can see here, this is kind of what I was talking about with, say, the S&P or any other stock. You can see how price managed to actually pull back to the daily 50. So you cross over the daily 50, you pull back into the daily 50, and then you shoot up. It was earnings, so that was the biggest reason why it jumped up like that. I got to say, pretty impressive move. Yeah, pretty impressive. This turned out to be a trampoline move, so price below the 50, but the Moxie indicator above 0 is a trampoline move. And this one had a much better setup going into earnings. I mean, it was in the trampoline move and then cleared above it, closed above the hourly 50, bounced into the daily 50, bounced into the daily 21. This actually looked really good. And so earnings confirmed how the chart looked. Again, at some point, this thing seems like it should have a pullback because it is pretty darn extended. There's a pretty big gap here, and it's outside of the 30 ATR and all that kind of stuff, and you are running right into some previous resistance. So expect a pullback, and then we'll have to see if that pullback is into some strength and what to do with it later at that point. And then speaking of Intel, yeah, so that one did not have a good time on earnings. And, you know, looking at hindsight, you could say like, well, you know, price got rejected by the underside of a downtrending daily 50. Okay. But earnings are always a crapshoot. So that's why I don't like to trade them. I like to trade up to and after earnings, but I just don't really like rolling the dice on earnings. So Intel, despite having the chips bill out there, is not doing very well. All right. Then speaking of bills, TAN. So this is the solar ETF, and another bill that the Biden administration is pushing out there is something about, I think, the Inflation Relief Act, which is going to be looking into alternative fuels and alternative energy and solar and helping with electric cars and all that kind of stuff to help, I guess, get off oil and that kind of stuff and go green for our energy and whatnot. So that caused solars, and I'll show you a couple other EV or alternate fuel energy source type names, they've all exploded and popped. Now, TAN had a pretty good setup. Even ENPH had a pretty good setup. Some of the other solar stocks really did not have good setups, and they just exploded based on news. The one thing, or two things I can kind of point out in through here is that you could see that the 200 was resistance until it wasn't. And then you can see that the daily 50 had mostly been support. And so it was just ping-ponging back and forth between these two moving averages until it finally decided that one of them was strong enough, the daily 50, to push through the other one, the daily 200. Also pushing through the weekly 50. Now this was the setup. I got to tell you, I was talking to one of our subscribers, and I wasn't exactly interested in trading TAN because it had just been bouncing back and forth, and I really didn't think much was going to happen out of it. But then the bill came out, and boom, boom. But I said right here, I said, if this is going to work, it should work right here, because you can see price flagged sideways right into an uptrending hourly 50. And I said, the Moxie indicator should be going positive the next day if this is going to hold. So I said, yeah, if you want to take it, give it a shot. If it doesn't work, then we will see, because price will go this way. But it sure worked, and that was definitely news driven because government throwing some more money at that industry. All right, Bloom Energy, you can see definitely up because of that. This one was tough. I can point out these things and show them, but good luck trying to find something to do with this. It is super choppy. I mean, just look how choppy that is. It did finally break out of that pennant. Unless you just thought this thing was going to go someplace or do something, and you're just, I don't know, finding a position in through here, this one was really tough. Yeah, not anything I could have really done, but just want to show you guys this one and show you what's happening here. I would imagine that we should be getting a pullback also at some point. We should be seeing that this, I mean, it just went straight up. It's too far away from its moving averages. So typically what we see at some point is that upside move is going to fade out a little bit. People are going to take profits. People are going to wait for it to come back down to a better buy point. And that is generally what I would expect from this. So I would consider something like this to be the first move. The first move of the breakout. That's great. Now, let's see if it can come back and maybe test some support like that, and then we can go buy it again, and we can maybe look at that hourly 50 for some support. So never upset or mad about stocks showing their first move, and then we can catch the second move. All right, Plug is another one. Same kind of deal. Really choppy, super hard to catch, but moved basically all on the the bill that came out, you could say maybe that price was holding the daily 200, and they were putting in higher lows. A lot of stocks were seeing that, but again, finding your exact moment of when to get in, pretty darn tough. So wait for a pullback, and let's see if this thing actually catches a trend. Let's see if it pulls back and can actually get going someplace. And so on the pullback or the flag, there should be a decent opportunity that you can pick out as to where you want to get in on something like this. Blink. And I'm just only mentioning 3 because they're all kind of the same. They all kind of were looking the same. They're all moving the same. But Blink also here on the weekly 200. It did finally cross over the daily 50. It's been making higher lows, all that kind of stuff. And then it just kind of popped and exploded. This one's pulling back a little bit sooner. But again, I wouldn't chase these things too much. This market has been very choppy. So I think that for the most part, if you wait for a pullback or wait for it to come to you, that would be a good, wise opportunity. And then KWEB, which is the Chinese ETF. I've been talking about this to the Moxie group for quite some time. We've been short a few names. You could see the elf shoe. Here's the leg. Here's the heel. Here's the arch of the foot, trying to put in the ball of the foot. And so what that told me originally was that this up move here should be faded and it's likely to pull back. So we did take some short trades in the Chinese names. You could also see there was a giant gap here between price and the daily 50. So I said, yep, this is gonna go at least to the daily 50 at some point. You could also see here's the Moxie price triggered to the downside, and leading up to that you could see price up, Moxie indicator down, then price getting stuck underneath the hourly 50 while the Moxie indicator was below 0. That was textbook. And then came through here, bounced, and I said, this is probably going to be an inverse trampoline move, and I would expect price to keep going lower. And that is exactly what price is doing over the last couple days. So just remember, price should not be over the 50 if the Moxie indicator is below 0. That's an inverse trampoline move. And then you can also see here that the 8 was below the 21 the entire time, and it just was going to slice through its daily 50. Now, maybe at some point, we got to wait and watch for this, but maybe at some point, this ball of the foot on the weekly chart somewhere, somehow, or maybe this undercut is going to actually turn into a buy, and maybe this divergence is going to be a buy, but we've got to wait for that to happen. It's not here yet. It could keep going lower. If it's going to turn, we should see it turn. So some of the names that are responding very well to this and that we were short and made some money off of was PDD. You can see it just ran right into a whole bunch of moving averages there on the weekly chart. Giant gap between price and the daily 50, and same thing like KWEB. It was just kind of slicing below the daily 50. The 8 was below the 21, and it too had an inverse trampoline move and basically followed the downtrending hourly 50 through there. So, all right, guys, I hope you're having a good time. It is going to be the weekend coming up soon, so I'll catch you next week. Have fun with this market. It's going to be a challenging market, and we'll just see where we can go from there. All right, guys, take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.